It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we run up to the end of 2024 together and talk about your real estate news 7 days a week. Just after 6 a.m. Yes, you can catch us here. And just a reminder, if you know of somebody that is just as much into real estate as what you are, let them know about the Real Estate Breakfast, because the chances are they might not know about it. It'll give you something to talk about over the water cooler, particularly if you work together. Today, it is a Thursday, October the 10th, and we are taking you to Melbourne. In fact, to an area, a location, and I know that Tim is going to talk a little bit more wider from this area, but let's welcome in Tim Milaki from Ray White, and he is in Ferntree Gully there in Melbourne. And Tim, welcome to the Real Estate Breakfast. Great to have you on.
How you going, mate?
I'm going good. How's all that property in terms of, here we sit, October the 10th. I keep saying, there's not a lot of gas left in the tank for the year.
Yeah, it's a interesting time of real estate at this point with what's going on, I guess, with everything. Quite volatile, but it is very simple as well at the same time, just depending on your view.
So tell us a little bit about Ferntree Gully, because I don't think we've actually put this under the spotlight at all. It's got a reasonable amount of residents, almost 30,000 people in that area.
Look, I think the growth in Ferntree Gully in the last 5 years has been quite incredible. You're on the border of many other suburbs, so Boronia, Bayswater, Rowville, Wanturna, Knoxfield. It's the area that I feel attracts more families, so very family-orientated suburb. And I think, look, over the last couple of years as well, we've seen an increase of a lot of families coming into the area, a lot of knockdown rebuilds. We're getting a lot of subdivisions. So everyone kind of comes to this area, I think, just because of the safety, being local to, public transport and major shopping centres, etc., close to the East Link. It's quite a popular area at this point.
Now, you mentioned the city of Knox. For the listener, can you just sort of explain what that captures in terms of suburbs?
We got Rowville, Listerfield, Ferntree Gully, Boronia, Bayswater, Upper Ferntree Gully. It's quite a tight-net kind of suburb, which is outperforming actually any other suburb at the moment in Melbourne. It's kind of always continuously growing. I think the buying market and the selling market is always consistent with the city of Knox and definitely outperforming any other area in Melbourne, to be honest.
So the city of Knox, it has Ferntree Gully in it. Let's just talk about 2024. How has the year been for you in the city of Knox?
The year's actually been quite great. I think the best months we definitely saw was January, February, March and April. I think those months we saw some cracking results, especially in Rowville, which has increased quite a lot. We had a couple of cracking results in Ferntree Gully too. With the pinch and I guess the cost of living after April, we started to see it become a little bit more volatile with people holding on to their pockets a little bit more. But again, the process of the sale and keeping that process quite tight-net, we're still getting premium results as well. It's volatile, that's for sure, but I think it's kept it quite consistent too.
Now, because you're in Melbourne, I guess we should talk a little bit about the property tax and the sentiment with investors, because some of the investors, they've decided, well, I'm going to leave the market. And you know what? Perth actually looks pretty attractive at the moment. Oddly enough, there are some transactions happening the other way from Perth investors looking in at the Melbourne market. A lack of trust with the government. How much does that play on the minds of those investors at the moment in Melbourne, do you think?
Yeah, look, it's quite enormous. I've actually spoken to a few friends that aren't even in real estate, a lot of investor friends of mine as well. Essentially, the investors have lost all trust in the Melbourne government, just with the land taxes. Everyone got hit with quite enormous land taxes, obviously, in the last couple of months, which has caused a lot of them to offload. So, for example, our office has 2,000 plus properties on our rent roll. We saw or are seeing 10% of them come to the market before the end of the year. So, yeah, we're starting to see a lot of them leave leave the marketplace from Melbourne and start to head towards other states such as Perth and Adelaide, which, we're seeing quite a boom actually right now.
All right, so we are in Ferntree Gully this morning in Melbourne, talking to Tim Milaki there from Ray White. We'll come back after this and talk more about that local suburb.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, we cover it all every morning from 6 a.m. on the Real Estate Breakfast.
Well, yesterday I was talking about PropTrack's data revealing and telling us the top 10 suburbs in each capital city, stating that median days on market where they have dropped rather significantly. Sydney's fastest moving suburb after Perth and Brisbane is Launceston in the Blue Mountains. And we've talked recently about the Blue Mountains, where the median days on market dropped 62% year on year to 22 days. Other capital cities saw similar trends, with Mount Nelson in Hobart leading with a 56% drop to just 14 days on market. And Hurstbridge in Melbourne's northeast, that sees a 44% decrease to 20 days. And we shouldn't forget about Adelaide's Morphettville, also experienced a significant drop for days on market, falling 39% to just 27 days. So some pretty interesting numbers from PropTrack this morning.
Every week we present so much real estate. Powerful, up-to-date news every morning from 6 a.m. Know your property with us on the Real Estate Podcast.
And it is a Real Estate Thursday. Not a lot left in our working week. We are in Melbourne in the city of Knox and Ferntree Gully. We're talking to Tim. And Tim was just telling us before the break a little bit of a lack of trust with the government at the moment. Some of those investors definitely pulling out of the Melbourne market. Let's right now, Tim, have a look at the grants for first home buyers, because that is creating more of a buy-in factor from what you're seeing.
Yeah, definitely. I think with the first home buyers, they're starting to be able to borrow up to around 975,000. What we're seeing is, I think the increase in first home buyers, definitely under that $1 million mark, is where we're starting to see majority of buyers enter the market, especially if it's close to that 700,000 to 800,000. Once you start to go above that $1 million mark, we lose a lot of the buyers, because now we're starting to incorporate people who are having to borrow a lot more money, which is capping a lot of those buyers to enter the market.
Now, just in the last week or so, we've done podcasts in the likes of Rockhampton, also Darwin, talking about their median house price, $500-$600, 800 square metres. And they're talking about interstaters moving from the likes of Melbourne. Are you sort of seeing that firsthand, people moving out of the area?
Yeah, we definitely are. I think we saw it, to be honest, after lockdowns. I think the majority, an enormous amount of people from Melbourne actually moved out to the state, to Queensland. A lot of them moved to Perth, a lot of them moved to Adelaide. So we're still seeing that now. Funnily enough, I've recently started to see a lot of people move from New Zealand to Australia now. So in the last week, I've met about 10 people who've actually decided to leave New Zealand just because it's getting a little bit too expensive now, and they're moving to Melbourne. So we're seeing a shift out, but we're also seeing a shift in from certain directions.
Well, that is interesting, because I can tell you anecdotally, something that we have noticed here at the podcast is the amount of New Zealanders following us now. And that was something that we never really used to see, particularly over the last 4 to 6 months. More and more Kiwis listening to the Real Estate Breakfast. And if you are in New Zealand, good morning to you.
Yeah, and that doesn't actually surprise me due to the inquiries that we're receiving and people from New Zealand that I'm meeting at open homes as well. So yeah, it's something we're definitely seeing.
Now, I just want to come back to what I was saying about the Perth investors, because it's going the other way as well. I know that you said that they're moving from out of the state into WA, but have you seen some of these inquiries from investors from Perth, just to pick on that state?
No, not really. It's more so because I have friends who live in Perth, and I actually have a close friend of mine who's Brent Ilicic, who's quite a great auctioneer that lives in Adelaide as well. And I watch, their market too, but the average bidders that they have in those markets is unreal compared to what you have in Melbourne. And people that I know who talk about how much cheaper it is to live in Perth compared to Melbourne. So I think, again, that's the increase of investors moving down to those areas, because the average sale prices are definitely a lot less than what it would be in Melbourne.
Now, in terms of the buoyancy, I think you were saying just off air that a reasonable number of people, I think you said you had 50 groups through one of your properties. I mean, that is really, really good, isn't it, in terms of the way people are feeling about the market. The properties you said under the $1 million range, yes, lots of transacting going on there, but 1.2 to 1.6 million, a little bit more difficulty in terms of moving stock. Is that right?
Correct. So I sell a lot in an area called Rowville, which we start to see, the increase of prices just because they're younger homes, quite large, more rooms, which, has that gap between the 1.2 to 1.6. So we're starting to see those people, who are able to borrow 1.92 million, they decrease to that, 1.6 mark or to 1.4, obviously with the pinch. So people are starting to question what they're purchasing because they obviously had a larger amount of funds to purchase something that was a lot better. So that's where we're starting to see people go, is my money going into something that's worth what I'm spending? So that's the biggest thing at the moment. I think just meeting the mark and listening to the market gets that process going. But we're also seeing a lot of sellers who are holding on to the price of January, February, March, and not understanding that we gotta listen to the buyers in a market like this, because they're not thinking those numbers anymore, and they're increasing that figure by 10 to 15% in their mind as well.
So for the city of Knox, how would you rate that buoyancy in the market in terms of positivity on a scale of 1 to 10, 10 being spectacular?
I think I'd say 6, to be honest. As human beings, we follow trends. You get one person or someone in the media telling you that the market's not doing very well. It starts to spread like wildfire and people follow that trend when it's not actually the case. I think the market's still very, very healthy. We got plenty of buyers, and, that property 66 Pipperita is a perfect example of 51 groups through an open home. Like, that just speaks for itself that the market's as healthy as it's, ever been. It's just a matter of meeting the market and listening to the buyers, then to, I guess, unlock that potential price where people, will emotionally put themselves forward.
Fantastic, Tim. All right, well, thank you for breaking that down. The city of Knox, Ferntree Gully. I feel that we've had a bit of an education on your suburb this morning, and thanks for coming on to the Real Estate Breakfast.
Thank you, mate. I really appreciate it, and thank you for having me. It was a pleasure, and maybe we can do this again someday.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
Bridging loans are great in their nature and they're short term, but the fact that they are short term sort of lends them to have higher interest rates.
Yeah, it's a very small amount of money in the long scheme of things. So just put that into its rightful box if you are looking at a property at the moment and you're saying, come on, property, but make sure that you do your numbers, of course.
Each lender does it a little bit differently, but essentially they're going to come out, reevaluate the property. You can set the bridging up over a shorter period. Again, yeah, it's a real strategy piece per applicant, but yeah, bridging can definitely help, I think.
Dubai is fast becoming the beach haven party capital for the world.
Yeah, that's right. Dubai is definitely quickly becoming the beach club capital of the world. Soon it will be home to 7 of the world's most favourite clubs. The first is Casa Amor, Saint-Tropez. Gigi will open its next beach house at J1 Beach at Le Maire. Next up is Ushuaia. This is an Ibethan institute. All in all, it's going to be an amazing lineup of fantastic places to party and have fun by the beach.
We connect you to the best real estate information across Australia. The Real Estate Podcast.